What started out as a quiet week for precious metals has ended with a bang. Just not the bang that we've all been anticipating in the Middle East due to the U.S. amassing the largest military support we've seen in the Middle East since 2003. Today's fireworks came on the home front, with the Supreme Court finally ruling that President Trump's executive authority to deploy tariffs at will is not legal. And he retaliated by saying he would deploy a 10% global tariff across the board on everyone. We'll see how that sticks. In the meantime, we got a weaker than anticipated GDP report for the fourth quarter of 2025 and a stickier than expected PCE report, which means that inflation continues to be pesky. We'll go over all of it and how it's positively impacted precious metals this week in this gold market commentary for Friday, February 20th, 2026. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your physical precious metals needs, we'd love to have that opportunity. In this gold market commentary, precious metals are rising over potential Middle East tension. And while gold and silver remain range-bound, both have pushed up towards the high of that range after silver in particular tested lows this past week. For gold, we've got a range of $48.50 to $51.20, or about a $268 spread, or about a 5% high to low swing. For silver, it's about $71.70 to $86.15 for a $14.45 dollar spread, or about 18%, which makes sense due to silver's enhanced volatility relative to gold. Meanwhile, the U.S. has gone on the largest Middle East military buildup since 2003, and the reporting of that, starting of Wednesday this week, helped to buoy precious metals higher and higher and higher, especially today going into the close on Friday, February 20th, which bodes well for further precious metals price movement higher next week. In the meantime, inflation stays sticky, and 2025 GDP and employment are easing. And this news over tariffs today means that tariffs will drop on average from between 13 and 16%, depending on what source you're using for that information. We thought it would be about 9% after the Supreme Court ruling, but then President Trump trumped that and came out with a 10% across the board tariff, which he hopes to deploy. We'll see if that sticks. I taped the gold market commentary that you're watching on Friday, February 20th, late in the afternoon after the precious metals markets had closed. I'm adding this update on Monday morning, February 23rd, due to a couple of different things that have happened over the weekend. First, Special Envoy Steve Witkoff was reported to say over the weekend to Laura Trump in a podcast that Iran is within weeks of being able to enrich uranium to weapons-grade purity. He says they're within weeks of that capability. And that clearly crosses a red line that the Trump administration has repeatedly say they would prevent Iran from being able to do so. This is from the Jerusalem Post. Iran could be close to enriching uranium from bomb-making materials, U.S. Envoy Steve Witkoff claims. The U.S. envoy left out, and this is a caveat, that Iran currently has no access to its materials, no machines to enrich it, and no weapons program to use it for any operational purposes. So how they're close to enriching uranium is a question, but the fact that he is bringing that up means that in the Trump administration's opinion, Iran is close to crossing a red line that the Trump administration said that they would never allow Iran to cross. And in my opinion, this is potentially the linchpin that will seal the deal for U.S. military action against Iran in the very near future. I think that this raises the stakes dramatically and explains why Prime Minister Benjamin Netanyahu was in Washington, D.C. about 2 weeks ago, bringing a sense of urgency to the Trump administration. And on top of that, President Trump over the weekend said tariffs would now be 15% across the board, with a different ruling that he can use to apply tariffs. I think it's Section 122 that's good for about 150 days. So that brings a whole lot of new uncertainty into the U.S. economy for businesses that are subject to tariffs. Can they reclaim monies they've already spent on tariffs? Will there be a tremendous amount of lawsuits? What's the procedures for reclaiming that money? What about the countries that have negotiated lower tariffs? All of these questions over the Supreme Court ruling and President Trump's reaction to it have added a whole host of new uncertainties to the equation, especially regarding future U.S. economic activity. And we're seeing precious metals move higher still as a result, with gold currently about $5,220 an ounce, up over $100 this morning from Friday. Silver's up about $275 to $87.50 from Friday, while platinum and palladium remain steady. So I wanted to add this to the update that I taped on Friday afternoon to bring you the latest information that I could bring you because of the new developments that occurred over the weekend. So thank you, and back to the update that I taped Friday afternoon. Let's get into our update and drill down on what's been happening with precious metals, which have risen since Wednesday, firming up going into the highest close we've seen this week on Friday afternoon. And this is what has been driving the markets higher. The buildup of U.S. military troops in the Middle East. This is a brief graphic I clipped from the New York Times showing where the assets are deployed. There's one major asset that has yet to make it there, which is the USS Gerald Ford, which is now in the Mediterranean Sea and on station. So if we're going to attack Iran, we could do so as early as February 21st or 22nd, although I don't think that is likely. I do think President Trump will give Iran the time to negotiate before we engage in military action. But if there is an opportunity for regime change in Iran, this is it. And everyone underestimated the military buildup in the Caribbean before the stunning seizure of Maduro out of Venezuela. So no one's being fooled by this buildup of the Middle East that's happening now by the U.S. Thinking of it strategically, Israel has paved a pretty clear path into Iran in the skies with the way they cleaned out all of the Iranian defenses last year that the U.S. participated in briefly. If we're going to participate in regime change in Iran, this is our chance. Coincidentally, I met an Iranian about a year and a half ago, and he told me that 95% of the public doesn't agree with the 5% of the mullahs that control the country. And they just want to have a happy, peaceful life. And we've seen protests all over the world this past 2 weeks in support of the Shah's son, Reza Pahlavi, I believe his name is, with 300,000 turning out in Berlin and 250,000 in Los Angeles and hundreds of thousands in other places. So we'll have to see what happens, but it looks increasingly likely that the U.S. will probably engage regime change in Iran. Let's get on with precious metals. Here's a 6-month candlestick chart of gold. And as you can see, since the big correction, gold has been holding support at 46.40. In fact, we've only touched that once on the low. Real support right now is about 48.40 to 48.50, as evidenced by that higher green support line off to the right, with resistance right at 5,100 that we are testing today for the first time since the last week or so. So gold firmed up quite sharply over the last 3 trading sessions, and in particular today, going into Friday's close. Let's take a look at the COMEX gold futures contract screen, and we'll drill down on this a bit. This is a 20-day look at the COMEX gold futures contract, which shows the high at 56.26 and then the big sell-off, and where we've been primarily for the last 2 weeks, with gold trading in a pretty tight range between 48.50 and 51.20 on the futures contract. For most of this week, we've been range bound, higher last week, easing going into this week, Here's Monday and Tuesday. And here's where the press really started to ramp up on their reporting of the U.S. military buildup in the Middle East and how metals have caught a bid since then. Let's drill down a little bit more tightly, going to a 10-day look on 30-minute bars. And here's a rising support line from the bottom of the sell-off going into Tuesday night and Wednesday morning's low. This is when the press reporting ramped up on the Middle East buildup. It was all over the press all day Wednesday. Gold firmed up, and today we firmed up a lot more. Friday the 20th. Let's drill down just a little bit further. Here's a one-day look just at today. We got to 50.61 and didn't get over it. Broke it a little higher, going up to about 50.80. This is when the Supreme Court decision was announced, which created some turbulence in the market. And then afterwards, the market just caught a bid and has moved higher going into the close. So some of this is going to be short covering, and some of this is going to be front running potential military action in the Middle East. A lot of this run higher is on lower volume on a Friday afternoon, but this is quite a strong close for gold on a Friday. So this bodes well for future price appreciation in gold the week of February 21st. And remember, the Chinese markets are closed until Tuesday, February 24th. So this has been primarily the London and the New York markets trading this week. And we've seen a real move higher just on Friday to touch up and cross over upside resistance for gold. Let's take a look at silver. Here's the 6-month candlestick chart for silver. As you can see, we've got a much wider spread in the bid and the offer. For support, it's 70 with resistance at 89.50. Resistance really is about at 86 over the last 7 or 8 days, not the last 2 weeks. So that's really where we're going to encounter a firm resistance. You can see by that black dotted line how I have penciled in today's market action, which took the market actually a little bit higher than that black dotted line even shows. So silver has been trading range bound. We're back to the middle to the higher side of the range now. And if we drill down on that COMEX futures exchange contract page for silver, I'll show you a lot more volatility than gold has been showing. Let's take a look. All right, here is the COMEX futures contract for silver going back 20 days on 1-hour bars. And you can see the peak at 121, then the sell-off, which led to a double test of the bottom, first at around 70, then at around 64. And now that we've firmed up over the last 2 weeks, primarily trading between 70 and 86 here. So let's drill down on this, going to a 10-day look with 30-minute bars. And here we go. Here's the high at 86 and the line that shows the price coming down from the previous high, which is at 90. And here is support from 64. We tested that support line here on Tuesday when the market looked weak. We were channeling lower. We had a lot of volume here right at 72, which was lower support than we'd seen before, which is coming in at about 74. But then we got the announcement of the U.S. military buildup in the Middle East all over the press, and silver has done nothing but move higher since then. Here's the support line that I put in place today to show that, with an upside resistance going into this afternoon that then we closed sharply over as the day progressed and we got into the very late part of the trading session. Let's go to 1 minute, 1 day bars, and you can see this move today. So here is Friday midnight. We punched up, went sideways, trading at around $80 for most of the London and morning session. Here is where the Supreme Court decision was made and silver firmed up. And then we got over that upside resistance line in short term at 82. And we've moved higher throughout the day. This is short covering and front running going into the weekend, with some traders obviously anticipating potential Middle East action, not wanting to be short going into the weekend. So silver's caught quite a bid going into a Friday close, which is a lot of strength for both gold and silver in these markets right now, with the futures contract closing at 84.57, just under the high of the day at 84.64 in the futures contract. So silver and gold have firmed up quite a bit, especially silver, going into the close. And this again bodes well for more positive price action next week. Gold tends to climb a wall of worry, and there's a lot to worry about in the Middle East right now. Depending on what happens there, we could see some of these gains fade, but I think we're going to go higher before we ever get to that point in time. So the markets are looking like they're firming up quite a bit right now, and I expect to see further price gains the week of February 21st. Here's the gold to silver ratio chart. Today, with gold at 50.85 and silver at 84.05, it's actually higher than that now, which would push this ratio down a little bit lower. I did this a couple hours ago. The ratio was coming in at 60.49 to 1. So that ratio is actually a hair lower now, a little bit below equilibrium. We did get to as low as 46.2 to 1 when silver peaked a couple weeks ago, and we've been as high as about 65 to 1 earlier this week before silver made bigger gains relative to gold over the last 3 trading sessions. So this ratio is dropping a bit again, making gold a little bit less expensive relative to silver in the current market. Let's take a quick look at platinum and palladium. Here's a 6-month candlestick chart for platinum, which has been much steadier over the past 2 weeks, trading primarily in a range between 1980 and 23.25. Over the past 6 or 7 trading sessions, the resistance has been closer to 2200, and we brushed right up towards that today with platinum closing the market at 2170, right in the middle of the channel that we've seen over the last 2 weeks or so since the big sell-off. Platinum is much more stable than gold, and especially silver, and it's underperforming relative to gold and silver right now. And so is palladium. Similar chart. Here's a 6-month chart for palladium, was supported at 1875. We closed today's trading session. It's about 1760. So palladium's right smack in the middle of its bigger trading range over the last 2 weeks, and much steadier than gold, especially silver. So that's platinum and palladium. Looking at U.S. economic information, we got the jobs report for January, which was a good one at 130,000 new jobs created. But most of these jobs were in the healthcare sector, which is where most of the jobs that we've seen over the past year, 18 months, have been created. Think aging baby boomers. However, we did get a birth-death model revision a couple weeks ago, which I haven't talked about yet, where we took 1,059,000 jobs out of the equation going back, I think, from September 24 to September 25. And those revisions are now on this chart. And when you take those jobs out for 2025, the U.S. averaged just 15,000 new hires on a monthly basis for all of 2025, which is the lowest job creation we've seen on an annual basis for years. Doesn't give the U.S. economy or the U.S. Employment market much cushion if we go into a slowdown. We haven't seen signs of that yet, but in earnest. But we did see retail spending get a little weaker last month. And of course, the U.S. consumer spending is 70% of our economy. So job creation is a pillar of the U.S. economy. And while we did get a good report for January, last year was pretty weak overall. Looking at GDP, we got a fourth quarter GDP estimate today, which came in at 1.42%, lower than expected by about a full percentage point, which is attributed to the government closure, which happened in October into November. So that potentially impacted fourth quarter GDP by a full percentage point, which is weaker than expected. So we haven't had a chance to really digest that yet, but the U.S. economy is clearly not quite as strong as we would have liked to have seen it relative to gross domestic product. Meanwhile, inflation is remaining pesky, with the PCE price index rising more sharply than expected in December. In fact, the highest rates we've seen in about 9 or 10 months. Let's drill down just a little bit on that. And this is the Fed's preferred gauge of inflation. And you can see how December has been higher than every month since March of last year. So this is showing that inflation is a bit stickier and explains why the Fed and the Fed minutes that were released this week over their January meeting where they didn't lower rates, it explains why they discussed potentially raising rates, because we got a good employment report and hotter than expected inflation. So the Fed may switch to defending inflation, which means they could actually raise rates. And that was what was discussed in the minutes, which caught the market off guard. And what are we seeing in the bond market? Well, we're seeing the 10-year Treasury yield slide quite sharply since the Fed meeting, skidding down from about 4.3% to 4.1% in the last month, which means investors are going to the safety of bonds, and lower rates are good for gold. They help to buoy the gold price, and that helps to underpin gold and silver as we go through this correction as well. If we get into a weaker economy with weaker inflation, then the Fed will ease. But in the meantime, it could be a bit of a tug of war, which could create some more chop in the precious metals markets. But right now, it's all about what's going to happen in the Middle East. And that's what's driving these markets, is potential fallout from a Middle East conflict between the U.S., Israel, and Iran. If you're interested in physical precious metals, by using the QR code on the screen, you can access our Getting Started guide, which features the most competitively priced, widely traded, and for you, easily sellable major precious metals products. This is the vanilla, chocolate, and strawberry of precious metals. Nothing complicated, the most basic products. So that's an easy way for you to understand more about the physical bullion products that we offer. And here's our website where those products are offered online in live, transparent pricing. We don't carry a lot of weird stuff. The mainstream items that you're going to want to own and be easy for you to sell. We try to help our clients every way we turn, and this is one of the ways we do that. Here are our social media handles if you want to follow us on social media between updates like these, where I often post interim charts and discuss the markets, particularly on Twitter and LinkedIn. And we have our daily gold update on Facebook and LinkedIn as well. And of course, our YouTube channel. Thank you for watching the video. If you're new, please subscribe. We talk about the markets in factual, timely, and hopefully for you, actionable basis. And here is our contact information. So thank you for your time today. As always, thank you to our loyal customers who've supported us over the last 28 years. Without clients, we wouldn't have a business, and we are grateful for your trust and loyalty every day of the week. Let's pray for our U.S. Men in uniform who may enter into harm's way, and hope that they return home safely. Best wishes and good luck out there.